If you've ever asked, how often do high yield savings accounts pay interest? Well, guess what? This video is just for you because I'm gonna cover, well, just that simple answer for you. But it is a simple answer, but at the end of this video, you're also gonna learn how to actually make more. Not just why they pay interest, but where you can find better returns, where you can even find a better paying online savings account, and actually a better alternative than those high yield savings accounts that they're always giving you. All right, so let's just answer your question really quickly, all right? Number one, how often do they pay you? It's monthly. Period. That's it. They pay you monthly, right? They pay at the end of each month. Now, here's the important thing to remember. They do pay you on the average monthly balance. So don't think you could pull one over on the bank. The banks they weren't born yesterday. Well, unless your bank started yesterday, then maybe it was. But for the most part, banks are smart. They've been around forever. They weren't born yesterday. If you try to dump all your money the last day of the month to say, look, I got this much, now pay me my interest, they're not gonna do that. They're gonna look at the average over every day of that month, and they're gonna say, yeah, you might have dumped in 10,000 bucks that last day, but we're gonna divide that by 30. So really, you get paid a little bit more. So they don't fall for that. They do pay monthly based on an average monthly balance. Now, you may be wondering, why do these high yield savings accounts, usually they're online types of savings accounts, why do they pay more than just a normal bank account? You know, why can they pay more? How do they afford to do so? Is this a scam or what? It's not a scam at all. It's business, right? Think about it. When you go to a bank, the actual brick and mortar bank that you walk into a building, they pay for the building, they pay for the land, they pay for the electricity and all the utilities, they pay for the people inside of it all working and doing their little thing, running around like crazy little people. You're paying for all that. Okay, so when you put a bank account, you set up a bank account, a savings account there, you're gonna earn point nothing percent, right? I know I was thrilled when all the interest rates dropped a few years ago and I went from making maybe 0.2% or 0.3% to making like 0.05%. That was not cool. But that's why they do it, because they're not gonna pay you a lot. But with online savings accounts, they're gonna pay you a lot more. They're gonna pay you more because they don't have the brick and mortar bank to deal with. They're not worried about the electricity. They're paying for a website. They're paying for everything to be done electronically and automatically without all the people, pushing the buttons for you. In fact, I mean, that's why you have the teller at the bank saying, seriously, you're in the 2020s. You can't just go online and upload your check, or you can't just go online and make a transfer. No, you can't just go to an ATM. No, I want to deal with your smiley face, right? That's why we walk into a bank and you pay for it. But the online savings accounts, you don't pay for that stuff, and so they'll pay you more. Sometimes it's usually about 5, 7, 10 times sometimes the return that you get with the bank. So for example, my bank currently is 0.05%, about to go up to 0.1%, I would imagine pretty soon. Well, I've got an online savings account that's paying me 1% right now. They just bumped it up thanks to the interest rates going up, right? It's nice because when the feds, if they're gonna start charging more on the money you borrow, might as well make a little bit more in the savings account too, even though it's piddly in comparison. So yes, they will pay you more. I love the fact I can get paid 1% of that online savings account and earn more. I'll tell you, back in the day, I remember 2005, the first online savings account that I saw and that I set up was 5%. 5% back in those days. We can't even find a crappy CD to pay you 5% right now. It was 5%. Right now, the highest yielding account I've seen is about 3.9%. That's the highest I've seen, but it's not as easily accessible as an online savings account where you can transfer back and forth between your bank. That 3.9 is a little bit more locked up, so that's why I'm not always recommending it. But you can earn more with these online savings accounts. Now, if you've set one of these up, great. You might be thinking, can I do better? Possibly. We'll actually put in the comments below, we'll put in the description here, we'll actually put a link that you can look up to see what are the best paying accounts, or even some of my favorite ones that I'm using right now. So you can go check that out in the description. But there's one even better than that. And that's a better alternative than just putting your money in an online savings account. Because again, the problem is you might earn point nothing percent or maybe 1%, but then they tax you on that point nothing or 1%. And that's not very exciting, is it? I mean, they're not paying us anything anyways, and they're gonna tax us on it too. So Uncle Sam wants to take whatever little we got paid and take it out to be their own? No, that's not fun. So what's another option? Infinite banking. Infinite banking is a nice little term that's used for those of us that actually leverage our life insurance policies. Now, I don't mean the death benefit. We're not talking about a term insurance policy where you have to die to get paid. That is not my recommendation for getting paid, by the way. I like you to live. We like it to be called life insurance, not death insurance. So there are life insurance policies out there called whole life insurance. Now there's some other ones out there too, but it doesn't work exactly the same way I'm describing. Whole life, the great benefit is not only do you get the death benefit, but you also have this tax-free savings account in there. Now, if you look it up, you have guys like good old Dave Ramsey from Tennessee, bless his heart, bless his little Tennessee heart. He's teaching the same crap that he taught in the 1990s. And even financial advisors say, gee, Dave, that's kind of outdated. That's not even true anymore. By the way, Dave Ramsey still tells you make 12% in the stock market. Bull, you've never made 12% in the stock market, but he still teaches it. But bless his little heart, he loves you, but he's gonna tell you that whole life insurance is a ripoff. You should only buy term and invest the difference. Hey, you know what? I agree. I think you should use life insurance and invest the difference. You can actually do that within a whole life policy and do it better. Because if you set it up the right way, not the way that traditional insurance agents, now I do agree with Dave Ramsey, if you set up like most insurance agents set it up, it's a waste of money. Do not do it. Unfortunately, 99.5% of insurance agents do it this way. I don't recommend doing it that traditional way. I do recommend, if you want more information on how this really works or go deeper in this little rabbit hole, we have a playlist called Infinite Banking. Check that out. We got more videos right there. But here's what you can do is that with my life insurance, within 5 years, it's already paid for itself. Term insurance never pays for itself until you die, unfortunately. You're always paying out, but it never pays you back. This one, 5 years later, you've already have more in cash that's built up in this tax-free savings account than what you've paid into it. So you essentially had free insurance, even though it's still there and you still have a death benefit. Oh, and the death benefit goes up over time. That's kind of a cool perk. Term insurance goes down with inflation, doesn't it? So this one actually keeps up with inflation and it earns money tax-free. I'm usually earning about 4 to 5% even after paying my insurance costs out of that policy. So you're making at least 4 or 5% tax-free, depending on your tax bracket. You're probably making at least 6, 7, or 8% if you're factoring in taxes. If you had a savings account, you would have to have a savings account paying you 6 to 8% to be able to match what we could do with a life insurance policy. But we don't stop there because that's good. You can make a decent amount of money there. But if you're just going to need it for emergencies, it's great, right? In fact, for my wife and I, we put our emergency funds, we put the bulk of it inside of our life insurance. We keep it there. Over 3/4 of our money is inside of our life insurance policy. Why? Because I like to make more than 0.nothing%. And if I don't have to pay taxes on it, even better. Now I'll keep some money in the bank, the local bank, so I can walk in and pull out money from an ATM or from a teller that day. I keep a little bit more in these online savings accounts that we're talking about as well to get these high yields, but I keep the bulk of it inside my life insurance because if we're gonna have a bunch of money sitting around doing nothing for emergencies, I might as well make some good money off of it. And if I can make 4% better than what I would make in my high yield savings account online, even the one I recommend, do the math, 4%, say that's only $50,000. Guess what I'm making? I'm making $2,000 more a year and I don't even have to pay tax on it. That's huge. So it's tax-free, it grows better. Oh, by the way, you don't have to worry about all these 59.5 rules and stuff you get from Roth IRAs, but it is a tax never scenario if you do it right. And guess what? Here's the best part. Even beyond my emergency fund money, I can use this money to double dip. I can get my money to pay me twice. Not only will it pay me inside the life insurance, and it's earning money in there, compounding interest tax-free, but I can get a bank or an insurance company line of credit against it. They'll give me a line of credit. They'll give me a loan against it because they know it's guaranteed to always grow. The minimum you earn on these, by the way, is 3%. It can never go lower than 3%. Cool thing is the companies we use have never paid their minimum before. They've paid higher. So you get a line of credit against it, a loan, and then I use that to go invest in other things like real estate, where I can make 10%, 12% plus returns on my money. So here's what happens. Not only do I make 10 or 12% of my money in the real estate investments that I'm doing, but because the loan rate that I'm borrowing is less than what I'm earning on the life insurance, I make money like the bank does on me when I put money in their account, when they go and loan it out at a higher interest rate. I get to do the same thing. I end up making a 1 or 2% or more return on my money here while making 10 or 12% over here, meaning I can now get paid in the mid tens digits, into the teens on my rate of return versus just making about 10 or plus % return. Huge returns. I can double dip on my money, get my money to pay me 2 times or pay me twice at the same time. That might sound too good to be true, but it's a strategy that even the banks have used themselves with their own money because they actually invest a ton of their money inside these same policies. So if Dave Ramsey was really right and they really were a ripoff, why do banks own so much of it? Yeah, he'll tell you, I've seen a video of his, it's because they're idiots. Well, guess what? Who's the bigger idiot? Sorry, banks win. They have more money than you, buddy, and they do it better. They've done better. They didn't go bankrupt like you did. Now, okay, there were a few banks that did go bankrupt last recession, didn't they? But don't worry, we got the good old US government to bail them out. Anyway, that's a whole nother video. Anyways, the cool thing is you can use this strategy to make more money and be able to double dip and get your money to pay you twice. So, like I said, the simple answer to this interest question is, how often do you get paid interest in your high yield savings accounts? It's monthly, and it's an average monthly balance. But you can make more money than that, having a better alternative, doing something like infinite banking. Hey, in the comments below, I would love to hear, what are some things you've done? What are some places you've saved your money and got a good high yield account? Go ahead and put those in the comments below so you can share with the rest of us and create some massive value. Oh, and if you think this video is awesome, go check out how do interest rates work in savings accounts. We go in even deeper in depth on that, so check it out today.